everyone. Happy Wednesday. This is Simon with AvaTrade. Welcome to our webinar. We're starting our webinar, Interactive Trading Conversations. I can see some new faces and I see some people coming in. So I think we're going to start. My name is Simon Friedman. A few words about myself. I'm a senior account manager at AvaTrade. I've been trading for almost 24 years now. And I moved after trading as a prop trader for about 11 years on Wall Street. I moved into a different way of trading, and also after 11 years, I started to mentor and educate other traders. And currently, I'm very happy that I have this great opportunity to assist our customers at AvaTrade. Agenda of the webinar, it's very important, especially for new people. I see some new faces. Welcome again. What we do here is actually this is the environment for you guys to ask questions, specific questions about specific markets. And we try to analyze them together. And if I know any fundamentals, I'll share them with you. And we'll take a look at the charts and try to analyze a specific instruments. This is the risk warning. You can find a full statement at avatrade.com. And of course, what we do here is purely educational. We do not suggest any trades. Social media of AvaTrade, I highly recommend for you to follow, subscribe, and follow. You have Telegram, you have X, which used to be Twitter, and my favorite YouTube channel, where you can find a lot of materials. You have tutorials, education material. You have webinars, including this one, will be posted later on YouTube as well. And if you are watching this in recording, please feel free to subscribe, to click on likes, to share it with your friends. And definitely, I would appreciate your feedback. If you can write your feedback, would be great. I think it would be really beneficial for you to follow us on the social media channels. I'm going to open the trading terminal, and we're ready for questions. Very important. I always have to say it, so we'll be clear here. We have up to an hour, and you can ask as many questions as you like. People ask about specific currency pairs or specific stocks or commodities or indices, whatever you'd like to know about. We will discuss it together. So please feel free, the same way where you typed in the questions window, where you typed confirmation that you could hear and see me. Please, let's start asking the question. Again, just to clarify, this is a real webinar, so I will not be faking questions just to keep the webinar going. And sometimes we do close it earlier when we run out of the questions. So I really ask you to ask questions and use this time proactively. And also, as I always mention, this is a great opportunity for you to also share with people that will be watching it on YouTube, because if you watch it in recording, obviously you cannot ask the question. So your questions are very valuable, because whatever we'll be discussing here, it will be beneficial for people that are watching it later in the recording on YouTube. Okay, so we are ready for questions. Please feel free. Don't be shy. Don't feel weird about it. Ask the questions. I'm going to read your question loud, and then we'll discuss specific instruments. And let's start with questions, guys, okay? Marek is the first question. Intel stock perspective. Great question. Intel is a great company. Of course, it's a hardware company. They do processors and other things. And lately, as the markets are making, guys, as we're talking, if you come up with the question, feel free to type them, so we won't be waiting for next question. And I'm continuing with Marek's question on Intel. Like I said, if I know any fundamentals, I'll be happy to share them with you. I follow a lot of instruments, including Intel. It's been super weak, and weak for a reason. I think latest weakness happened here when the earnings report came in. It wasn't so great, and there was an interview also with the CEO, and I read that interview, and I can't quote exactly what he said, but the idea was that they're spending a lot of money by building new factories and new plants for their technology, and he said it takes time. First of all, it's a lot of expenses, and he said it takes time to turn it profitable. So his projections were by 2027 up to 2030, Intel is going to be very profitable as all those spendings are going to start showing profits. So obviously investors didn't like that, and the stock's been selling. If you take NASDAQ as a tech index, making all-time highs. I think yesterday we just made the all-time high on NASDAQ. Let's take a look. This is your NASDAQ at the all-time highs. And if you take Intel, it's not only far away and moving higher, it's actually has been moving lower. So perspective, a great question. Really, we don't know what the perspective is, but obviously investors don't like it. On the running market, where all the tech stocks are running up, I mean, take NVIDIA for instance, Intel has been having trouble. So I guess if they're going to speed up that process of getting profitable, that would help. Maybe they'll come up with something that will excite the investors. Maybe something to do with the AI, which is a fancy word today or abbreviation for artificial intelligence. Maybe they'll surprise us, and that could happen overnight as well. Now, also, if you look technically, if you're familiar with something they call dead cross, when the 50-day moving average crosses below the 200, and it happened right here, somewhere in the beginning of May. So that's a signal for a sell signal, pretty much. For the tech guys or at the analysts, they talk about it a lot of time. As here, as you could see, there was the opposite, something they called golden cross, when the 50-day moving average crosses above the 200, and then it was a move to the upside. So just to give you an idea here on Intel, let's try to see a weekly chart. The recent downturn started at about $51. When the price was $51 the end of last year. Since then, we're trading now at 31, so $20 down since then. So this year so far, we're down $20. All right. So I guess we need some fundamentals for the stock to get stronger. Otherwise, there's a lot of pressure to the downside. Thank you for the question, Marek. Good question. Okay, as I'm waiting, at least I'll be sharing with you something important that's about to happen in about 45 minutes. We have FOMC minutes, which they will be telling us, thinking of the Feds at the last meeting. And market is awaiting for that, for those details. And definitely we'll have some volatility, mostly involved in US dollar, possible gold, and the equity markets. And then also today after the market, when US market closes, after the close, we have NVIDIA, which we just discussed, reporting the earnings. Also a lot of pressure on that earnings report. Marek, thank you for saving the day. Guys, I think you should take an example from Marek and act the same way. Next question Marek is asking, is Tesla overvalued now? It's a tricky question. Is it overvalued? Depends how you look into it. PE ratio, other things. If you really try to analyze it from the price to earnings ratio, a lot of stocks are overvalued. But Tesla is a very funny animal, as you know. A lot to do is with the CEO, a lot to do with the issues that affected the stock when Twitter was bought and turned into X. Actually, I was giving a market review on Tesla today, so I know a few fundamentals. Yesterday was a nice move to the upside on Tesla, and there are three major reasons why Tesla went up. Number one, they just announced that they increased the interest rate for their loans that people pay for the cars. They offer loans. Tesla offers their own loans for buying the cars, and they used to charge APR, which is annual percentage of 0.99%, so almost 1% for 72 months loans. So that's 6 years. and they increased it to almost 2%, from 0.99 to 1.99%. So that increases the profit of the company for sure. Second reason is the senior manager of PepsiCo just announced that they are purchasing, or they getting delivery of 50 more semi trucks from Tesla. And so far they've been using 36, so it's another 50 that Tesla is selling to PepsiCo. And as of now, it's actually a monopoly. Only PepsiCo is using those trucks for now, but I think starting next year, it will be available for other companies to purchase. So that's second reason. And the third reason is there's a meeting in June of shareholders, and some major shareholders trying to convince everybody to vote against the pay that they kind of have a plan to compensate the pay of 56 billion. So they're trying to vote against it, or encourage everybody to vote against it. So that's also a positive thing. And as you could see yesterday, we had the move to the upside, and today we are trading lower again. So if you look at the longer term chart here, Tesla is really having a lot of issues. And is it overvalued? Again, that's a tricky question that I wouldn't be able to answer. But as far as levels, $200 used to be a key level that we were playing around all the time. Then this drop here in April went to as low as 138, and then we had a nice recovery here on promises. They promising a lot of profits from robotaxi and the semi trucks that I mentioned, and other things. So it's very tricky. And of course, like I started with, it's a lot about personality of Musk, of the CEO. He's famous for creating all kind of issues, and he's a cool character. So some say he doesn't care about the money; he just has the idea. So his personality is definitely affecting the mood of the shareholders, and that affects the price of the stocks as well. Okay. Ged is asking, what trading strategy would you recommend for new traders? For the new trader, the best strategy I would recommend, and excuse me for my sarcasm, but it's a real thing, the strategy of preserving your capital. Okay. As you're learning, you need to really build the right skills for trading. And in any market, especially these days when there's a lot of, I wouldn't call it, not necessarily volatility, but uncertainty on the market, and sometimes lack of direction, even though we are going higher in equity markets. And you really need to learn to discipline yourself. And I'm speaking from experience. I've been trading for almost 24 years. Actually, next month, June, will be exactly 24 years since I started. So I lost a lot of money for just being excited about making money. So speaking from my heart, if you are a beginner, the main thing you want to do is to build the right habits, because to break the wrong habits, it's much harder later on. So work on your discipline, work on your money management and risk management. And as far as strategy, any strategy, if you apply all the rules, would probably work. But the problem is that a lot of people are looking through a lot of strategy, and they're not really working on their discipline. So even the best strategy with the lack of discipline and strict risk and money management will fail. So try to work on that. Okay. Alistair is asking, hi Simon, I'm fairly new to trading, especially FX. Need some technical and fundamental tips. We don't do tips, Alistair. I'm very sorry. You can learn. We have academy, educational academy with AvaTrade. You can learn. My colleagues are doing amazing webinars. I think Troy is doing one on technical analysis, one on fundamental analysis. Speak with your account managers and consult with them. Okay, but Tips is a tricky word. Marek is asking risk to award ratio for beginners when trading. It's a little tricky. 1 to 2 would be great. One thing is it's even better if you manage to do 1 to 3. That means it gives you more abilities, and it's a very common. A lot of mentors and professional traders kind of recommend 1 to 3. For instance, it gives you space for mistake. You know, some traders are under a false idea that you need to have a 95, 100%, 90% successful trades, and that's false. If you ask any professional trader who's been in business for 5, 10, 15, 20 years, they will tell you that their ratio is probably around, not the ratio, but the percentage of the successful trades, it's probably between 35 to 45, maybe 50%. So it could be shocking to some people. You think, wow, we do only 50%. So how come the professional trader is better than me? Because there's always a 50-50 chance, right? So that's where 1 to 3 comes. You know, if you risk $100 and you're trying to make $300, just to give you, for simplicity of calculation, so you can afford 2 losing trades, and then 1 out of 3 you make, you're still ahead. If you lose 100, and then you lose another 100, and then you make 300 and a third, you're still $100 ahead of the game. So that's why 1 to 3 ratio, it's a great ratio. But again, the different strategy. I remember years back, I used to trade the strategy. I'm just sharing with you my personal experience, where my ratio was actually the opposite. I was risking 2 to make 1, but that was the strategy. I was based on one of the professional traders that shared that with me years back. So it depends, but a normal trading environment, common numbers are your profit should be twice the risk. 3 times the risk, it's much better. Okay, I hope that answers your question. Beata is asking about gold. Good question. Thank you, Beata. I can tell you one thing about gold. It's going to be moving in about 33 minutes. It's probably going to move a lot. Which way? It's probably going to go up and down, spiking, and then it might pick the direction. You see, when you trade gold, you need to watch something. I'm going to try to make a screenshot, maybe bring it to the window now. Something they call 10-year yields. These are the yields on the 10-year bonds, US bonds. 1 second, I'm going to take a screenshot, show it to you really quick. So here are the bonds, the 10-year bonds. Gold is very sensitive to it. So when 10-year bonds are getting stronger, gold is selling. And take a look here. We had the move on 10-year bonds to the upside, and gold went down. So if you're a gold trader, again, it's not written in stone, but this is something that affects it. And of course, it's very sensitive. In general, gold has few, like they say, wearing few hats or have few titles. One is the inflational instrument, and that's why it's being affected by the dollar and the bonds, the 10-year yields here, the percentage. And the second one, which is a classic historical title of gold, is safe haven. So when the equity market is selling, then the money goes to gold, because people, historically, we're talking hundreds of years, if not thousands. I don't know, I don't want to exaggerate it. But when things are in trouble, people put money in gold and they flee the country, to put it in a simple way. So that's what brings the gold to that title, safe haven. So, and sometimes gold's getting really confused. Is it being affected by the market, the equity markets, or is it being affected by inflation? And also, I'm going to take this away now. this move, the recent move higher here, there was something to do with physical gold being bought, and China was the biggest buyer, and a lot of central banks actually were busy buying physical gold to offset the inflation. So that's also added to the strength of gold. So as you could see here, it's been strong. We've been trying to make highs here on gold, and today it's selling. Maybe some people know more details about the FOMC minutes, maybe just profit taking since we had this recent move to the upside. We don't really know, but we are looking strong on gold. We're in a strong uptrend here, but a very strong correction here that led to the all-time highs again, and a lot of people are bullish on it, and it's kind of funny because going back to the safe haven, we have gold at the highs and the equity markets at the highs, which kind of paradoxical, right? So I guess we'll have more details on it, but as of now, we had this double tap on gold, and the most important upcoming event is actually tonight with FOMC minutes, and it's definitely about the Feds and their plan for the future interest rates. Okay, so we answered that. Belvin is asking, true, I'm a beginner. Please teach me about markets. Introduce us, please. This is not a teaching class. I'm very sorry, Belvin. This is something that if you come up with a real question for real markets, I will discuss it together. Okay, but feel free if you are a customer and if you have an account manager, please reach out to them, and they'll be happy to help you. All right. If you have any questions, also you can communicate with our customer service via chat, email, or you can give us a call as well. All right. Thank you all for participating. You have a wonderful evening. We'll be back next week, hopefully. All the best.